Which safe haven assets will fail you during inflation? Imagine putting your money into what seems like a safe place, only to find it doesn't hold up when prices are rising fast. That's what we're here to uncover today. When inflation heats up, not all investments stay steady. Some assets that look safe can actually let you down. Let's start with gold, often called the go-to safe haven. Gold's value can go up during inflation, but it's not a guarantee. If inflation gets very high, gold's real returns might turn negative. That means even if the price in dollars rises, its buying power can shrink. Gold also doesn't produce income like dividends or interest, so it doesn't help if inflation erodes your savings over time. Next, consider bonds, especially traditional fixed-rate bonds. When inflation rises, the fixed payments you get from bonds lose value. Your money buys less, and the bond's real return can turn negative. This is why many investors prefer inflation-protected securities, which adjust their principal and interest based on inflation rates. But plain bonds can fail you during inflation spikes. Equities or stocks are another example. While some companies can raise prices to keep up with inflation, the overall stock market often struggles during high inflation periods. Stock prices can become volatile, and the real returns after inflation can be disappointing. If inflation persists, the value of your stock investments might not keep pace with rising prices. Now let's talk about commodities as a whole. They tend to rise with inflation, but they are not foolproof. Commodities like oil, metals, or agricultural products can be very volatile. Prices can swing wildly based on supply, demand, or geopolitical events. If you're relying solely on commodities, you might face sharp drops in value during certain periods. So what about real estate? It's often seen as an inflation hedge, but it's not perfect. Property values can increase, but they also depend on local markets and economic conditions. If interest rates rise along with inflation, mortgage costs go up, which can slow down property appreciation or even cause prices to fall. In the end, assets like gold, bonds, and stocks can fail you during inflation if you're not careful. Diversification becomes key. Combining commodities, inflation-protected securities, and real estate can help protect your wealth better. Remember, no single asset is foolproof, especially during unpredictable inflation periods. Being aware of these risks helps you make smarter choices and avoid surprises when prices are climbing.